Thank you very much for joining us today. We're going to now talk about VA loans. VA loans were established in 1944 with the Servicemen's Readjustment Act. They provided for a 25% guarantee of the loan amount for veterans as a benefit for serving and protecting America. A few things unique about VA properties versus a conventional product that we were talking about earlier is the only ones allowed to use a VA loan are the veteran and or the veteran spouse should the veteran be deceased. You cannot use a VA loan to purchase an investment property, much the same as an FHA loan. However, you can use VA on a condominium, again like an FHA loan, but you can also do flip properties where FHA said, no flip properties, we're not out to help sellers get rich buying homes, fixing them up and turn around and sell them. VA says, hey, as long as they've done a good job fixing up, even though the sellers own the home less than 90 days, we're okay with that. We just want to make sure everything's safe. And if the veteran wants to purchase that home, we're behind it all the way. They will, however, be asking that the VA appraiser come out to your home. Again, they have their own standards. One of the unique things about a VA appraisal is they will require that there be a pest report pulled and that any dry rot, termites, any of those types of pests, if the home is infected with any of them, they'll need to deal with that, get rid of that, and certify that it no longer is infected. And when it comes to income, the VA borrower is more lenient, or the guidelines are more lenient towards the borrower than with the conventional loan. With a guideline of 41%, remember, conventional was 36%, FHA, which is the most lenient, was 43% guideline, but is, again, with VA, as long as you get an automated approval that approves the veteran for more than that by going to HUD through their automated underwriting engine, no problem. They will take that approval and they will allow us to go. Again, we routinely get up 47, 48, 49%. Again, they have to have great credit and other compensating factors, but they will allow them to do that. They do not allow non-occupying co-borrowers, though. Again, we stated the only one allowed on the loan is the veteran and their spouse. One other exception would be two veterans going in together to purchase a home can each use a portion of their entitlement to purchase a home together. Okay, let's look at credit. VA is the most lenient when dealing with borrowers when it comes to credit issues. The minimum FICO that a veteran is expected to have is 620 to 640. Just like with an FHA loan, if the veteran is borrowing it sole and separate, but he is married, they will require that the veteran's spouse pull a credit report. Her score will not come into play at all in the deal, but any debt that she has will be piled onto the veteran, just like with the FHA borrower, to qualify for the loan. When it comes to BK, short sales, deed in lieu, foreclosure, notice of default, by far VA is the most lenient in these areas. If it's been at least 2 years and we have at least 12 months of clean credit, no problem. You're an AP paper deal when it comes to VA loans. When it comes to cash to close, again, very, very lenient. We'll be talking in a moment about how much you're required for a down payment, but gifts are okay as long as they're approved giftors. Down payment assistance is approvable. Seller credits and lender credits are also approved. And we'll talk about why I'm not saying for down payment. As we talk about notice of value, remember we said that the VA appraisal is a little bit unique. Well, it's unique in this way also. The maximum VA loan allowable is $417,000. Notice that's the same amount as the conventional loan, up to $417,000. What VA does to top that is you can get 100% financing. Yes, I'm saying no down payment required as long as your purchase price is $417,000 or less. You can get 100% financing using a VA loan. And should the purchase price exceed $417,000, still not a huge problem, but you are going to be required to put some form of down payment down, and that would be in the form of 25% of the amount above $417,000. One thing nice about both FHA and VA loans is they are assumable loans. Getting the loan isn't going to be necessarily a positive thing, but later on when they try to sell their house, it might be to their advantage to be able to sell the loan with an incredibly low interest rate such as we have today. The last thing that is unique to a VA loan that we're going to be talking about right now is the funding fee. What's the funding fee? Funding fee is the fee that the Veterans Administration charges one time upfront, kind of like that 1.75% upfront portion of the FHA loan, only VA has no monthly payments to make at all in the way of mortgage insurance. They, instead of having mortgage insurance, they have this funding fee. The first time the veteran uses it, it's a 2.15% of the loan, one-time fee. Anytime after that, if they pay off that loan and go get another loan in the future, buy another house, it would be 3.3%. One exception to this is going to be the disabled veteran. What an awesome deal. If the veteran has served his country and he is a disabled vet, they do not charge any fee at all for that. So, what am I saying? I'm saying that a veteran can come in, they do not need any down payment at all, they do not have any VA fee, and if they can get the sellers or gifts from other people or get the lender to give them a credit, they can purchase a home, and we do it often. Veterans can get into the home easier than anyone with no out-of-pocket expense, and certainly the least amount required as compared to an FHA and a VA loan. So, in summary, when it comes to income, we can see that the most strict of the three loans would be the conventional. The most lenient, as far as guidelines are concerned, would be the FHA loan. When it comes to credit, conventional loans, again, are the most strict. The most lenient would be the VA guidelines. And when it comes to cash to close and assets, the most strict is conventional. The most lenient, again, is VA. Thank you very much. I appreciate you taking the time to attend our webinar.